Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are diving deep into the macro and the short-term charts, discussing the current major horizontal resistance at 64 to 65,000. Whether or not Bitcoin is going to breach this level of resistance and continue much higher, or if we're going to see a short-term pullback. We're going to be going over the key levels that you should be paying attention to, the exact trigger points for both potential moves, and of course, the macro charts. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, join us over in VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to all of our group chats, our general chat, our trading chat, education chat, our news, daily video help, and trade setup chat. Go ahead and check it out, guys, by contacting me in the pinned comment of the free channel, by clicking my name, or viewing our trading track record, or a video showing you inside the channel itself. Check it out, and let's dive on in. So as we can see, Bitcoin, albeit, is still sustaining above this uptrend we have been above since essentially the beginning of September. We are seeing some horizontal chop occurring within the range between that major horizontal resistance at 64 to 65,000 now, and this base of support at around 62.5k. We can see a whole heap of short-term volatility has been developing within this range, with multiple attempts to breach this upper level of resistance, which we have done so, and this resistance has now extended slightly higher, as Bitcoin is still failing to get above that macro trigger point. Now, if we're looking on the higher time frame, moving to the 6-hour chart, we can still see that horizontal trigger point sitting over here. If we draw that horizontal line in between the points of this prior high, which is around again 63,800, 64,000, and of course the prior deviation high we saw back in August 27th, August 26th, 2025. So about a month ago. Again, we have retested these equal highs. We are seeing some indications of bearish divergences, and yet again, we are rejecting from this point of resistance. So we're going to be discussing in the video today what exactly needs to happen for us to clear that resistance. And as we can see, the next target above here is going to be all the way in that $70,000 region. And of course, what potential negative consequence could come about if Bitcoin were to drop below this long-standing uptrend. Moving over to the market data, we'll get back to all that in a second. The market data for Bitcoin, taking a look at the volume and liquidations, 24-hour volume down 15%. Sitting at a total of 115 billion, 24-hour liquidations down 17%, 91 million, 58 million coming from longs, 33 million coming from shorts. Moving over to the DXY, holding on by a thread still on this major 1.5-year horizontal support, sitting at 100. We can see that sustaining this level is going to be ideal for the DXY. If we do drop below, which is very likely, we are going to see a very large macro downtrend continue, as we have broken below that 1-year long symmetrical triangle formation uptrend. Again, the measured move of this pattern, applying the retest of the range high, the retest of the range low, to the breakdown point, actually takes us to that 94-95 region. So we are expecting a macro downtrend to follow if and when, more likely when than if, this horizontal support breaks. And of course, this move downwards will be incredibly bullish for risk assets. Moving over to the S&P 500, still looking fantastic. A day and 21 hours remaining on the weekly close. Very likely we're going to be closing a full body candle above that prior high point. Remember guys, while we sustain above this high, we are expecting moves to 6,000. While we sustain below this low, we are not expecting high time frame downtrends. If we do drop below that low, a high time frame downtrend will initiate. That will be the start of a macro downtrend. And while we sustain above this region, 6,000 is going to be that first psychological target. Overall, macro bullish on the S&P 500. That is it guys. Let's get into Bitcoin. We're going to be taking a look at the total market cap for Bitcoin. Total 3, total. We're going to be taking a look at Bitcoin dominance. We're going to be going over the short term as we just mentioned, as well as the daily and weekly charts, and even very briefly, the macro charts for Bitcoin. Before we do get into all of that, make sure guys to support the channel, go ahead and sign up to BitGet, BitUnix, or BingX. The links are down below. You'll get a lifetime trading fee discount of 15%. This will literally save you thousands of dollars in fees in your trading career. It has saved me well over 6 figures. Again, 15% permanent discount on your trading fees to any of the exchanges down below. You just need to sign up to one of them. We'll play a quick ad for one of them and we'll get back into the video. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So as we can see, this is going to be the 6-hour chart. This is the chart we're going to be taking a look at in detail today, talking about a few things. First and foremost, let's discuss this current resistance. This is really that big resistance. Now, this resistance has been a level of significance since July 2024. The reason I say July 2024 is because this was our major retest before we saw a correction. We then flipped this level as a base of support for a period of around 2 weeks, which we then lost and saw a strong correction toward the downside. We then saw a rally and build up to retest this area, which we saw a rejection from, only then resulting in a strong correction toward the downside. That brought us to the start of September, where we then saw the rate cut and we saw the price build upwards. We are now yet again retesting this position right over here at this major resistance. So it has been a point of confluence, a major point of significance on the chart since looking back to July 2024, sorry. So a major point on the chart, a major point of resistance. Now, furthermore, this level of resistance is essentially the final point of major resistance for Bitcoin before we will see a rally up to these prior highs at 70,000. Now, with that move up to 70,000, we will also subsequently see a retest, okay, and a possible breakout of this macro descending channel. This macro descending channel has now been spanning over 210 days. So a break of this horizontal resistance will likely be what is needed to facilitate a continuation back up to the range high of this channel. And if we take a look at that weekly chart, we do now have a weekly break on the RSI, indicating we have got positive momentum, something we did not have on the prior retests of that range high. If we look at these retests, we did not have positive momentum, we did not have positive momentum, we did not have positive momentum. In all 3 retests over here, momentum was still negative. If we were to retest it again, it would be the first retest during this 210-day long consolidation where momentum was actually positive. Again, positive momentum, that is a representation of strength, indicating the probabilities for a continuation is greater than a rejection. That is very significant. So if we go back to the short-term chart, we can say with a massive degree of confidence that if we are able to break through this resistance and flip this resistance, we are likely going to see a continuation to that 70,000 region, and actually very likely see a continuation through that region. Now, if we look at the measured move, again, if we take a measured move of this range, let's go ahead and delete everything on the chart. We take the range high to the range low. This is going to be the depth of the channel applied to a perceived breakout point. That would take us to around 83, 84,000 as an expected target as a consequence of breaking this resistance. That is how important this resistance is. Now, with these massively important levels, there is always going to be indecision, okay, and chop developing around them. So when we look at confirmations or breakouts, there is more speculation than certainty. As we can see, we were expecting a break of 64,000, which would trigger a move upwards. We then saw a move upwards, only to get rejected again, and we are still very much sitting in this resistance. So we have to take a more conservative approach now to confirming the break of this resistance. We can do that in two methods. We can look at a direct break, or we can look from an invalidation perspective. First and foremost, the invalidation perspective would simply be, while we sustain above this diagonal uptrend, and this uptrend now, if we take a look at it, has been lasting, if we look around 19 to 20 days, while we sustain above this uptrend, the expected trajectory of the price action is that we would eventually see a break of this horizontal resistance, provided the price continues along the trajectory of the trend. So provided the price action does not break below this trend line, we would inevitably see the price compress to the point at which that trend line would break. And that is going to be our invalidation method. That is number one. Number two would be a breakout method. We are watching for a direct breakout of the exact high we saw last time at 65,000. Those are the two methods we are now watching for continuations higher. Until then, it is best now to assume that this area is an area of resistance and we are likely going to see chop. And it is best to expect chop and take your profits on positions and lock in your profits while we are in this chop zone. Only upon the invalidation of the trend would we expect lower, and only upon, again, the price sustaining above this trend for long enough to clear this resistance would we then be confident in that being the breakout. So we're not looking for timeframes, we're not looking for anything in regards to the price action, we are simply going along with the invalidation method. Now this only works under the assumption that you have already positioned yourself well, and if you do take a look at our positions, if we go ahead and show you again the VIP channel, you can see over the last couple days, look at all these longs we have been taking massive profits on basically every single long position. We have been positioned for these longs since all the way down over here. So we've caught on that, we've capitalized on that. Now is the profit taking zone. We break this resistance. That is going to be the new entry level zone for new longs yet again. If we go ahead and take that statement and contextualize it with something like the total 3, we can see the total 3 is currently trying to break through this major resistance. We've got 24 hours remaining on the total 3 to break this resistance. However, you would also note we are at a horizontal level. So while Bitcoin is now at a major resistance, the total 3 is also at a major resistance, telling us that albeit the possibility for strong continuations are there and are very likely, we do have to be a little bit more cautious while we are in this particular chop zone. The expectation is upwards to 70,000, but we have to be cautious and we have to be aware. So let's talk about being aware. If we drop below this trend line, we are expecting corrections of Bitcoin. We can immediately take a look at this trend line and look at our VRPV on the right hand side and see some levels of significance if we take the visible range of this uptrend. So the visible range of the uptrend will show us that our levels of significance for the VRPV is going to be, most importantly, down at the $61,000 level. We see a gap into 61, and of course we have our psychological level at 60,000. So if we zoom out again, we can take a look at those levels 61 and 60,000. Let's go ahead and draw some horizontal levels in. 60,000, we have got a pretty significant level. This was again a prior level of resistance spanning through here. This is our $60,000 support, which we'll draw in, and our $61,000 level, let's go ahead and draw that in, was this prior high and horizontal resistance of this range. So let's draw that range in right over here. So we can see two minor, so this is a minor and major levels of support on the chart, again psychological levels if we were to break down. So what does that mean to us? It means that even if we do see this breakdown for Bitcoin, we don't expect to see a steep break. We don't expect to see a break all the way back down to these prior lows. We would expect to see a quick flush for Bitcoin, meaning quite a rapid sell-off, then to consolidate, and then to continue upwards. That is what we are expecting if we see a breakdown of the trend. And I say if we see a breakdown of the trend because that is not incredibly likely at the moment. Okay, that is literally it for today. I don't feel the need to go into anything more. Make sure to stay aware of what is happening. Do not get FOMO. It is easy to get FOMO when you see coins going up. The reality is, if you're looking at a coin and it's up 70%, probably should have got in before it went up 70%. Now, it's easy to say, you know, but if you're just getting into the market and you're only paying attention when everything's looking fantastic, you're always going to be late. You're always going to be chasing your tail. You're always going to be chasing the ball down the hill, okay? The best times to pay attention, I say this all the time on the channel, is when the markets are boring, when everyone doesn't care, when the altcoins are looking seemingly dead, when there's not much movement. That is when you should be planning, preparing, and getting ready to execute. By the time everything's already moving, you're taking a significant more risk on when you're positioning yourself. And the reality is, the majority of people probably watching this video, unfortunately, the majority of people in the market really end up just chasing their tails, taking on excessive risk, and at one time they get burned so much that it wipes out their entire portfolio. So stay attuned to that, guys. Have a fantastic rest of your day, and we'll catch you in the next video tomorrow. See you then.